What's something people don't know about credit cards? Today let's talk about something that sits in many wallets, something that can feel like magic money. I'm talking about credit cards. What is this piece of plastic really? Is it your friend? Is it your enemy? Well, that depends entirely on you and how much you understand it. A credit card is not free money. It is a tool, yes, a powerful tool. But like any powerful tool, if you don't know how to use it, you can get seriously hurt. So, we are going to break it down. Simple, clear, no confusion. A credit card is essentially a pre-approved loan. When you use a credit card, you are borrowing money from the bank or the company that issued the card. They are saying, okay, we trust you to spend up to this amount, and you will pay us back. It is a promise you make, a promise to repay what you have borrowed. This is not your savings account. This is not your emergency fund sitting in the bank. This is borrowed money, and borrowed money always comes with strings attached. Many people get their first credit card and think, great, shopping spree. That is the first mistake, a big one. A credit card is a convenience. It can be a safety net. It can help you build a credit history, which is so important for your future. Think about buying a car. Think about getting a mortgage for a home. Your credit history, built responsibly, matters. Are you ready? Good, because understanding this is the first step to financial security. What's something people don't know about credit cards? It seems so easy, doesn't it? You swipe it, or tap it, or enter the numbers online, and poof, you have what you want. But there is a whole process happening behind the scenes. When you use your credit card to buy something, say a new pair of shoes, the credit card company pays the shoe store for you. Right then and there. The store gets its money, you get your shoes, everybody seems happy for a moment. But remember what I said, you are borrowing. The credit card company, the bank, has essentially fronted you the cash for those shoes. They have paid the merchant on your behalf. Now, you owe that money to the credit card company, not to the shoe store anymore. Your debt is now with the card issuer. This is a critical distinction. You have entered into an agreement to pay back the amount you charged, plus any fees or interest if you don't pay it back on time and in full. This is the core of how it works. If you keep that in mind, you are already ahead of the game. I bet you didn't know how crucial your credit limit is. This is a very important number. Your credit limit is the maximum amount of money the credit card company will allow you to borrow at any given time. Think of it as your spending leash. They are saying, we trust you this much, but no more. When you first get a card, this limit might be relatively low, perhaps a few hundred or a couple of $1,000s. As you use the card responsibly and build a good payment history, they might increase that limit over time. This limit is not a target. I repeat, it is not a goal to reach. Just because they say you spend up to, say, $5,000 does not mean you. Maxing out your credit card or even getting close to your limit is a red flag. It tells lenders you might be overextended. It can actually hurt your credit score, which is the opposite of what we want. So, that limit is there for a reason, but it's a boundary, not an invitation to spend wildly. You need to hear this if you're a credit card user. We need to talk about interest rates, often called the annual percentage rate or APR. This is quite simply the price you pay for borrowing money if you don't pay your balance in full each month. And let me tell you, this price can be very, very high. Credit card interest rates are typically much higher than rates for other types of loans, like mortgages or car loans. This is because credit card debt is usually unsecured, meaning there's no collateral like a house or car that the bank can take if you don't pay. So they charge more for the higher risk. When you get a credit card offer, you will see the APR listed. It might be a range, or a specific number. Sometimes there are different APRs for different things. Am I the only one that didn't know how crucial the billing cycle is? Let's talk about timing. With credit cards, timing is everything. And the key to understanding this timing is the billing cycle. Your credit card billing cycle is a specific period, usually about a month long, during which your transactions are recorded. Think of it like a running tab. Every purchase you make, every payment you send, every fee that's charged during that cycle gets logged by the credit card company. It's your monthly financial report card for that specific card, detailing all the activity. At the end of each billing cycle, the credit card company will generate a statement. This statement is so important. It will show you all your transactions from that cycle. It will show your previous balance, if any. It will list new purchases, payments, credits, fees, and interest charges. And most importantly, it will tell you your new balance, the minimum payment due, and the payment due date. Why are there not more people talking about the minimum payment trap? It's not your friend, people. Alright, I need you to listen to me very carefully on this one. The minimum payment, every credit card statement will show you a minimum payment amount. It might look tempting, it might seem so small, so manageable, especially if you've spent a lot. But let me be crystal clear, the minimum payment is a trap. It is designed to keep you in debt for as long as possible. It is designed to make the credit card company the maximum amount of interest from you. It is not your friend. It is not a helpful suggestion. Think about it. You need to hear this if you're a credit card user. Powerful pros and pitfall cons of credit cards. Credit cards are not inherently good or bad, they are tools. And like any tool, how you use it determines whether it helps you or hurts you. So let's look at both sides of this plastic coin. There are definite advantages, real pros to using credit cards responsibly. One of the biggest is convenience. It's often easier and safer to carry a card than a lot of cash. They are widely accepted, especially for online purchases or when traveling. This convenience is a major draw for many people, and it's a valid one. Another huge pro is the ability to build credit history. If you use a credit card wisely, making small, regular purchases and paying them off in full and on time, you demonstrate to lenders that you are a responsible borrower. This builds a positive credit history, which leads to a good credit score. And a good credit score opens doors. It means better interest rates on mortgages, car loans, and other forms of credit. It can even impact things like insurance premiums or renting an apartment. So, used correctly, a credit card is a powerful credit-building tool. Are you worried about managing your credit card responsibly? Here are some smart steps to help you be the boss of your card. So, you understand what a credit card is. You understand how it works, the limits, the interest, the cycles, the minimum payment trap, and the pros and cons. Now, how do you make sure you are the boss of your card and not the other way around? It comes down to discipline, awareness, and a plan. First and foremost, create a budget. You must know where your money is coming from and where it is going. Only then can you know what you can truly afford to charge to a credit card and pay back in full. Don't use your credit card for expenses your budget can't cover. Second, as I've stressed repeatedly, pay your bill in full and on time every single month. Make this your non-negotiable rule. If you cannot commit to this, then perhaps a credit card is not the right tool for you at this moment. Set up automatic payments for the full statement balance if that helps you stay on track. But always check your statement to ensure the payment went through and there are no errors. This one habit, paying in full, will save you from a world of interest charges and debt headaches. It is the cornerstone of responsible credit card use. Third, keep your credit utilization low. Remember that 30% rule of thumb? Aim for that, or even lower. Don't max out your cards. If you find yourself regularly getting close to your limit, it's a sign you are overspending or that your limit is too low for your responsible usage patterns. In which case, after a period of good behavior, you might ask for an increase, but only if you can handle it. High utilization hurts your credit score. Low utilization helps it. This is why you need to understand credit cards. We have covered a lot of ground, haven't we? We've talked about what a credit card is, a loan, not free money. We've talked about how it works, the importance of your credit limit, and the danger of high interest rates. We've unmasked the minimum payment trap and weighed the pros and cons, and most importantly, we've talked about how you, yes you, can use credit cards responsibly and make them work for your financial well-being, not against it. It all comes down to knowledge and discipline. Credit cards can be a valuable part of a healthy financial life. They offer convenience, security for purchases, and a fantastic way to build a strong credit history. That credit history is your passport to achieving bigger financial goals down the road, buying a home, getting a good rate on a car loan, even starting a business. But this positive outcome only happens if you are the one in charge. If you treat that piece of plastic with respect and understanding, if you follow the rules of smart borrowing, the pitfalls are real. The temptation to overspend is always there. The burden of high-interest debt can be crushing and can take years, even decades, to overcome. It can steal your peace of mind and your future dreams. I have seen it happen too many times. That is why I am so passionate about you understanding this. You must be strong. you must be smart.